What's going on, Investomaniacs? Your boy Knight Rider here. Now, before you say it, I'm gonna go ahead and say I already know what you're thinking. You're like, man, I never realized Knight Rider was just a better looking version of Keanu Reeves. Right, come on, am I right? Am I right? Wow, all right, that's enough of that. Let's go ahead and let's get to work, people. Robinhood snacks, stock market news for the day. There is now a big alt meat competitor. Tyson unveils raised and rooted. It even lays eggs. That's the fake final line to Tyson's fake chicken announcement. America's biggest meat company officially rolled out raised and rooted nuggets made with plants. It's a direct shot at BYND Meat, the faux meat pioneer whose stock is enjoying one of the best 6-week starts in history, up 464% since its IPO on May 2nd. Tyson used to be an investor in BYND, now it's imitating it. It really looks like a chicken nugget, but there's no chicken. It's just like a nugget, bro. It's a mix of pea protein, egg white, and bamboo. Yo, bamboo ain't just for pandas, homie. And golden flaxseed. That's the vegetarian option, but then there's the reducitarian option, the blended burger. It's still got some beef, but it's diluted with some veggie stuff too. The takeaway, can anyone make meatless meat? The race is on to whip together some plant byproducts in a bowl and somehow make it sticky enough for a respectable burger patty. Here's who's getting in besides Tyson and BYND. Impossible Foods, the still private maker of the insta-famous Impossible Burger. KFC, the Chicken King, launched The Imposter in the United Kingdom on Thursday, a corn filet sandwich that looks like chicken. By the way, corn is a fungus-based meat. Not really sure how I'd feel if the word fungus was in the ingredients list in my nutritional information, but we'll see how it goes. Nestle just revealed an awesome burger, and Campbell's Soup announced yesterday its plans to somehow take the animal out of bone broth. Fiverr wants to own the gig economy and surged 90% on its IPO day. Need a new website, logo, and data entry? Hey, Fiverr knows a guy. The freelance marketplace for the lean entrepreneur is a platform connecting growing companies with freelancers. Gig workers for 200 categories of services, from SEO to resume reading or writing. Hey, picture Uber, but for graphic design instead of a ride. While shares surged 90% on its IPO, we side hustled some Fiverr facts. It literally trademarked the word gig. Not sure how Craigslist is going to feel about that. And it's catching this wave. The US gig economy is growing 3 times as fast as the general US workforce. Fiverr's got one career weakness: benefits. Or perhaps lack thereof. Technically, the freelance writer who Fiverr connects to Startup X to write website copy or whatever is an independent contractor. They're on a 1099, son. If new laws and regulations start requiring gig workers to earn full-time employee-style benefits and be on a W-2, that could hurt freelance hiring, and Fiverr knows it, and so does this guy who owns a publishing company that is completely revolved around 1099 work. And I don't think I would have a profitable company if I had to pay everybody on W-2 basis. The takeaway, the gig economy is 2 economies, not one. Fiverr has focused on creative and professional services like similar freelance connector Upwork that IPO'd last year. Uber and Lyft target more functional jobs, from driving cars to dropping off gyros. The existential question, Is there room for multiple middlemen to own these two separate gig economies? HSBC became Saudi Arabia's top investment bank. You are the wind beneath my wings. That's the message from Saudi Arabia to HSBC whenever it needs a big bank, according to the Wall Street Journal. Founded in Hong Kong and now headquartered in London, HSBC is a banking beast. Man, they're number 7 in the whole world. And despite Saudi Arabia's 2018 killing of Washington Post journalist Jamal Khashoggi, and its controversial Yemen war, HSBC is standing by. $65 million in banking fees over the past 2 years. That's how HSBC is being rewarded for its loyalty. Since the Khashoggi murder, many banks and corporations have cut off business with Saudi Arabia. HSBC has turned its head and opened its wallet. Investment banking. The Saudi state-owned oil company Aramco, aka the most valuable company in the world, but it is private, got its bonds structured by HSBC this year. More iBanking. HSBC helps the government issue bonds, basically IOUs from the government, to help it handle inconsistent revenue from its giant oil business. Retail banking. After an expected merger, HSBC will own 29% of the third biggest bank for basic Main Street style banking in the United Kingdom. The takeaway: higher risk equals higher potential reward. Banks are in the business of calculating risk. There are conventional risks and unconventional ones. And HSBC is showing it is willing to take on both to try and make some money. Credit risk. Banks lend money. Taking on the risk, they won't get paid back. Investment risk. They also drop money into startups and new ventures, knowing they might completely fail and never get paid back. Reputational risk. HSBC is on speed dial with Saudi Arabia, knowing it could be labeled an accomplice to murder in the court of public opinion, which may cause investors to not want to invest in that company, ultimately potentially hurting the shares. Hope you guys have a great day.